Ruth on today, and she really came up with this amazing title, and I'm really looking forward to going over this material with her and with everyone, how to grow a multi-million dollar law firm. And I mean, I think a lot of us go into business, wanting to, we think we can run a business, we like helping people, whatever we're doing, we know we have a law degree, whatever we're in. And then, but the finance part, I don't know about you, but like a lot of people, that's like the biggest weakness because we either we never learned too much about it or it wasn't our interest or something like that. So now we're going to do a deep dive. I know I say deep dive, but the more we get these PowerPoints filled with information, it's harder to do that because so we're going to go over a lot of material, or Ruth is, and I'm going to be asking questions, and so will you in the chat. And just let you know that everything that we are recording, and so those who registered, if you had a conflict or whatever it may be, we will give this to you. We will email it to you. I see a lot of friendly faces and names. So just a little bit about me. I've been practicing 13 years. My firm's 12 years old. I wrote a book called Build and Manage Your Successful Immigration Law Practice for AILA without losing your mind. It's still really relevant, lots of great information, and talks a lot about all of the areas of running, the cylinders of running a business. And started up doing these webinars earlier in May of this year, and inviting guests and friends to come do a deeper dive on different topics. So if you're interested in doing one, feel free to message me. We're looking to book out the first half of 2022. Can you believe that? So anyway, I'm talking fast because I want to get to Ruth. So Ruth is amazing. McChesney, she's lives in San Antonio. We have been on committees or panels. We've gotten to know each other over, I don't know when we first met, but basically we're both immigration attorneys in Texas. So that helps to bump into each other at some point. But she's the CEO and managing partner. She was the CEO and managing partner for DMCA in headquarters in San Antonio, but has offices in multiple places, including Austin and Houston from 2000 to 2019. So almost 2 decades there, and is currently of counsel. So that's why we could probably steal her away for maybe an hour. Otherwise, she probably couldn't have talked to us. But she also is board certified and charter member of the State Bar Immigration Nationality Section and fellow of the College of State Bar. So I'll let you say more about yourself, but I'm really excited to have you. And I think that we all need if not a refresher, maybe a 101 on how to be more profitable and how to read these documents, the financial reports and these ratios. And just, we're going to have everything from beginner to PhDs, I think, in the financial sense. And so, but, hopefully you'll come away with some action item. Either you're on the right page or maybe you completely had it wrong this whole time, but at least you'll have what usually helps is that you realize you're not the only one who is learning and catching up and improving. So Ruth, anything else you want to say about yourself before we dive right into the material?
Sure. Thanks, Ruby. First of all, thank you. And it's amazing everything that you are providing and accomplishing. And I'm always inspired by everything you're doing and so many other immigration lawyers and just, my peers. It never ceases to amaze me, especially as we go through difficult times like the pandemic, and not to mention the Trump administration and all the daily challenges. So I did want to get that out there because I know it's not easy, and trying to run a law firm is difficult. As far as my background, this is actually my sort of third career. I actually started in computer programming, then went into accounting, had my own business, and loved the business aspect of businesses. That's what really drives me, other than, of course, the client base. That is critically important. But that's sort of my background in a quick nutshell. I think, some of the practices that I will share with you as far as what I've done over 20 years with the firm. I actually started managing it in 1999, but then didn't become a partner until that year later. But before that, I do did bring a lot of experience, good and bad. I mean, I think learning from experiences is a given. Hopefully, maybe you don't always learn from it, but I've tried to learn, and I will share all that with you.
Well, thank you. I appreciate how humble you are at providing a lot of that information with us. And so as we move into the presentation. And so like, if you're new to this, basically we discuss, we put questions in the Q&A or the chat. And, you know, if it's apropos to where we're at right now, we can bring it up. If not, we'll bring up the questions towards the end, but we are going to cover a lot. And if you also, if it's easier to say it, you can unmute yourself and we can ask the question. So, you know, a lot of the material in your PowerPoint reminds me of the Goldman Sachs 10,000 Businesses financial section, because it's, you know, you need to know what reports you need that are essential on a regular basis. You need to know what ratios to be analyzing. And I think I'll just tell you honestly, like for the first site, I don't know for how long, many years, a long time, I guess maybe 6 years or so into the firm, I was sort of going, you know, hit or miss. I really didn't know what I was supposed to be looking at. And I don't think I had good advisors. I didn't know what I was supposed to be looking for. And so when we were preparing, Ruth, I was telling you, like, there's people who don't even know what documents to be looking at. There's people who don't even trust the information, the data that they have. And some people might have gotten lucky with a great CFO type advisor or CPA. And then there's others who are just still trying to figure stuff out. So what are why don't you walk us through some of the key financial reports that you look at, and maybe tell us like why it's important to you and how often do you look at it?
Well, the income statement, honestly, this is just what I have been doing for over 20 years within the law firm context. Income statement, I just take a peek at it every day. Really, I think if you do like every month, or I think that's really definitely at the monthly mark. I think that's really critical. That really tells you what the income statement does is reflect all the income that's coming into your firm, and that is reduced by the expenses in your firm. I think one of the key questions, and we'll go through that a little bit, one of the key questions that I've sometimes gotten or often get is if our income statement is showing a profit, where is the money? How does that how does that balance? And that's where the cash flow statement comes in, because the income just reflects revenue and anything you're expensing. It doesn't reflect assets you've purchased. So that's money going out unless you've leveraged credit or some other financing activity. It doesn't reflect distributions. So if you've issued a distribution, that's going to reduce your cash. That is definitely not going to be reflected in the income statement. Income statement is really just your operations, revenue coming in and revenue going out, like your daily operations. The cash flow statement, I think, is often neglected. And I often hear people talk about cash is king. Well, yes, right? But where do you see this cash, right? Is it checking your bank account balance daily? I suppose that gives you an idea of what your balance is, but it doesn't really reflect the activity of your firm. It doesn't reflect checks that haven't been cashed. It doesn't reflect a lot of things. So you want to look at your cash flow statement, and any accounting program will generate that for you. And that reflects all cash coming in, or when I say cash, I mean payments, right? Whether they're anything that's flowing into your bank account and anything that's flowing out of it. And that's over a given period of time, right? So whatever that period is that you're looking at, same with the income statement, you can do it over any given period. That's really important to ensure you know what is your real liquidity today. What do you have pretty much in the bank? So the bank will tell you, I mean, you can look at your bank account all day, but it's not going to reflect everything that's going on in your firm. And what it also does is reconcile your net income, which is already reflected in the income statement, which is the revenue less your expenses. If you got a PPP loan, that would be reflected in the cash flow statement, but not in your income statement. It may, at some point, your accountant may adjust that to be not part of your operating income, but additional income, because it's not taxable. So it wouldn't necessarily be reflected there. So your accountant may take care of it in different ways, but you'll definitely see it in your cash flow statement. And so
that's another thing that just came up when I was talking to my CFO this week. I hadn't told him that one of my PPP had been forgiven. So I was like, oopsie, because he needs to know what to do with that. But yeah, that's important. And that's sort of that everybody knows what's going on, where to put things in the reports. And so, but because it's not taxable, but also how that's going to be reflected in your reports.
That's right. So it's important to look at that cash flow statement. Honestly, I talked to a lot of attorneys and a lot of different law firms in different contexts. And if you're not looking at it, you're not alone. I think that the majority of people don't look at the cash flow statement. I think it's an important piece because it gives you a bigger overview of it. Income statement, really, that's really your daily operations, critical. I think that that's a very, very important document. Your balance sheet, that is basically, what is the net worth of the company and the owners, right? If you have more than one individual, if you're not a solo and you've got partners, that will be reflected there in their capital accounts. If they were to leave today, what is that value? And there are other things. I mean, other things that wouldn't be factored in. But this is important because this is also a liquidity issue, and this is more reconciled with your cash flow statement. So if you are reinvesting profits into your firm, you'll see that as part of a retained earnings. That's good for helping the firm grow, right? So you've got money to reinvest in the firm. Your sales reports, this is a daily thing I look at. And to this day, I still do that because I still provide consulting services and counseling services for my partner. But the sales report is really key. Once you do the budget, right? So, and we'll talk a little bit about budgeting for the coming year, and I've always done like 1 year, 3 year, 5 year, but those are the key points, but I always do like every year, but I look at the 1, 3, and 5 year. And so when you're budgeting, and knowing what are those outflows, your cash outflows for the month. If I'm looking on a daily basis, this is how many cases were initiated, and how much. So it's like your accrual basis is really the cases that were initiated. You may not have all the money today, but that's the future. And then if you run your report by a cash basis, you'll know what payments you received from clients on that given day or a given period of time. That you can do it for a day, given period of time, et cetera. So that's really important, because if you know your number, the monthly cash outflow you have to meet,
yeah,
and you'll know whether your sales, unless you have some other sort of revenue stream, but most law firms, it's just the operations, the sales, the case initiations, the payments. And that helps you take any corrective action, whether, whoops, how am I going to make that? I'm not quite at the point that I need to be. How do I make that? Do I need to book more consultations? Who's doing the consultations? Who's doing a lot of different things that I know Ruby covers in her book, and she covers that through these workshops she handles. But there are so many things that these reports are only going to tell you the story of your firm. It helps you pinpoint issues quickly versus trying to review every little thing. So the sales reports to me are really critical. Who's signing up the cases? What kind of cases are we signing up? Where has it decreased? Where has it increased? Those are very key. Oh, also on your balance sheet, that's just on a certain date, right? So that doesn't cover a period of time. It just says on this date, as of this date, this is what your balance sheet looks like. Accounts receivable reports, that's important to run it, because you want to know, are clients running behind? Do we need to collect? What is happening with these cases? Are we producing? Why can't we collect? So knowing what is owed to you, and if anybody is falling behind, if you're on a payment schedule, or if you're not receiving it, if you're not in a payment schedule, if it's when it's generated, are we not producing, and why are we not producing? That's kind of the overview of these financial reports.
Okay, so I have a various questions. One of them is like, who's giving you all this data, and how do you know it's accurate? And because I mean, some of us, some smaller operation, we might be putting this stuff in ourselves, or we might not trust the people that we're putting this in, or there might be some latency, like it might be delayed. And so you're looking at stuff every day. Some people might just be looking at once a month or every few months because it takes a while. So how did you, who's in your team, and how did you get to that point to be able?
Well, and I'll tell you, when I joined, Joe had been in practice, I think my initial partner, Joe had been in practice maybe over 20 years at the time I joined him. So it was very busy, but we didn't have, and busy isn't always good, right?
Yeah, that's true. Busy doesn't necessarily mean profitable. And that's
exactly.
And another thing is, having more people doesn't mean you're more profitable. And there's a couple of those misconceptions that you learn the hard way, unless you let somebody tell you.
That's exactly right. And so there were a lot of pain points at that point. I actually implemented a good, strong accounting system. At the time, I mean, I remember talking about, well, explaining why I really needed a computer versus, certain other systems. And I mean, it was during that time frame, right?
Oh, okay.
So establishing it, I think I want to say it probably took about 5 years. It wasn't easy because it was already an existing firm and it was busy. So there was a lot of activity, a lot of little tiny transactions. So overall, it probably took me about 5 years to establish a system. I think, so it's not, it requires a lot of work. I think one of the things that you want to, as an owner, and if you're not sure about it, I mean, there are people that can help you with this, right? I know Ruby can probably refer some people that are willing to help on that end. But part of it is the more data points you set up, the easier and key data points, the easier it is to call all this information and really leverage it, right? How am I going to run my firm? How am I going to be more profitable? So part of it, some of the things that I looked at were, so you have to set it up, and any of the accounting systems will do that for you. We use the QuickBooks Enterprise version, and then our case management systems. We use 2 different case management systems for our different case types. But those can also be set up. And I know some systems are all kind of put together. So like Clio, and there's some that are just all kind of get together, or they link to QuickBooks Online or other versions of that. But any of these systems can do that for you. And you have to coordinate both your case management types with your accounting system. But you want to know, in an immigration, our immigration firm does every type of case. So the way we split it up, and I'll share as much as I can without divulging any confidential information, of course, but just generally, this isn't a secret, right? So we have, for example, our practice group. So you may have your removal defense, or what we call our litigation section, or if you do general immigration practice, which would include family-based special cases like TPS or DACA. It would include consular processing on the family-based side. Generally, this is how you can split it up. Or our business immigration practice group, which uses a whole different case system because it helps us leverage that type of a client base better. And so we split that, and anything reflected in our case management system matches our accounting system. So you can do every single data point. So at any given, and then in our accounting system, I recommend you do it also by attorney who initiated that case, who originated a case sometimes. So for example, I brought in some corporate accounts to our law firm. And so that I'll always be the originator on that, but then an attorney can initiate different cases under that corporation. And then who is the assigned attorney who is going to actually be working the case. Often it can be the same person. If you're soloable, it's all the same person, but I still recommend you do that because it helps you see how much the value of your work. And then you can split it. If you have different locations, you can split it by different locations, or you can split that also by practice groups and then the different types of cases under each practice group. For me, that's really important because at any given point, I can generate a report as to what kind of cases is this attorney initiating? How many consults is this attorney doing? What is that conversion ratio, right? How many of, if you saw 100 cases, 100 consults over a 1 month period, and you only signed up 20, that immediately will highlight for me. So this is like the daily review. When I'm saying I'm reviewing the sales reports every day, this is actually what I'm looking at. So this will pinpoint for me, wait a minute, is this attorney's time better spent working cases versus consultations, or is this an intake issue? When clients are calling in or emailing or doing online setting up of their consults, who's doing the follow-up and ensuring that we have enough intake to get it to the appropriate attorney. So we, it depends who's doing consults. So, because we split it in different areas. Does that answer your question, or an elevator?
No, that does. And I'm thinking, I know we need to move to the next topic, but basically, my team right now is I have 2 people in-house, pretty much like 1 bookkeeper, I guess you could say, that's going after accounts receivable, sending out contracts and invoices. And then, and then basically I have this outside, like sort of contract CFO who's reconciling, double checking, and then giving me advice based on what we're seeing. And we've been doing sort of a cleaning house. We switched over to QuickBooks Online for everything. And I think a couple of things come to mind, as Ruth is speaking, try to use the least amount of programs possible. Like we were having this whole thing where we had QuickBooks Online and then LawPay over here and then e-immigration, and like things were sort of, connected, but not really. It wasn't a complete, what's the right word I'm thinking about, like connection. And they might say that they integrate, but they might not fully. And so that's where you got to really test them on it. And if this isn't your like wheelhouse, you've got to have people in your court who are basically supporting you when you're asking these questions before you bring on a new vendor. Like one thing that's annoying about, I don't know if maybe someone has the answer to this, but like we switched over to QuickBooks Online only for taking our credit card. We really liked LawPay for a long time, but LawPay wasn't perfect and had something about accounts receivable and invoices. I don't know, something it was deficient. And so, but the problem with QuickBooks Online is you can't divert some to IOLTA and some to flat. So we have to run everything through the IOLTA account, and then we have to just monitor from there. It was nice with LawPay, we could just sort of siphon to whichever one was supposed to, and then we had less thinking. But also, I think the information, so what measured is matters, it's sort of the Peter Drucker quote, if you will. But basically, if you're not measuring this stuff and you're not making it a priority to collect this data, then you're not going to have it to make decisions. And with Goldman Sachs, they were teaching us that 10,000 businesses, that it's like we're captains of a ship, and we need all of those reports up at the knobs and the reports and up on the front to be able to guide us where we're going. And I think during COVID or recessions and things like that, it's like a dark and stormy night, and we're at sea, and there's mines in the floor, and we're trying to dodge them, and but if we don't have data, then we're just going in a fog, and we might hit something and we might make a bad decision. And so I think it's important to have good systems, know what you're doing. And I think if this is something that you're not your favorite happy place, you got to find somebody you can trust to give you guidance on this. Because if you sort of like put your head in the sand, and it's wake up one day and have a big mess, and that's not a good way to go. And so I think to one of the questions that Shell had asked was who gives you these reports? I think you sort of answered that simultaneously
Yeah, yes.
about
I
the
mean, I do
QuickBooks
depend. I
Online.
mean, yeah,
Yeah.
I do have a great team, but I
Mhm.
have to tell you, I set up the whole system years ago
Mhm.
and have changed it, how depending on, fluctuation, what's happening. So for example, when DACA first came out, that's a line item we added in our, and I know that was a short-term project. It wasn't going to be uh, it wasn't a permanent program, right? So it was just a short-term project. Did I want to hire a whole bunch of extra staff to do that? No, because that was a permanent thing, right? That would be a permanent thing versus something that reflects it. So I think, I mean, I set up a lot of these. I mean, I set up the whole system. I really did, but that was because I enjoy it. I love this stuff, but also I knew what I wanted, and it was hard for me to find somebody that I trusted that could actually do this and give me what I needed. And then, of course, now, I've got a great team that is checking on these things. I still do on a daily basis. I look for anything that doesn't look right, and I'll send it to that lead person in our accounting, in our bookkeeping, to look at it, to review it. It makes it a lot easier for me. And this you could do. I mean, these aren't things, this isn't rocket science. It's about learning, and you don't actually have to do the bookkeeping part of it. You don't, if you do, and you've got your key points and knowing what those practices are and those standard operating procedures are, it can be done. And that's how you get your team to do it. And then it's really about, I think for the first step I would take is understanding what is that information that's important to you and that's key. I gave you the most key ones that I think for any firm would be by attorney, we also have like the legal assistant or a paralegal that's assigned to any given case. It's really important. Uh, but
And I
but it
know,
can be done, and it does take time. It's not easy. It does take time.
so basically you need to know what you're talking about or have someone who can help guide you, and you need to build a good system for it. And I'll tell you, it's building the system, like Ruth mentioned, 5 years. I've seen it take a while too. It could take time. So be patient with that. And then the other thing you mentioned, we got to move on, but is basically like some firms do tag the attorney that brought in that business origination because of for bonus purposes, legal assistant as well. Are they generating enough revenue to justify their salary? Having that information helps you be more objective when you're talking about potential raises or bonuses. And if you do origination for your attorneys or something like that. And I know that, and also can help gauge, like someone says, well, where's most of your business? And you might say it's family, but then you run some reports and realize it's employment, or I don't know, removal or whatever. And like maybe that's going to change the way you do your marketing, or maybe you realize that this is easier to do, whatever it is.
And
And it pays better. And why don't you get more of that?
I think those are great points, Ruby. And it also reminds me of it reminds me of two things. One is volume doesn't necessarily mean profit, right? I mean, I've seen, in different organizations where as an organization, you've got this great profit margin and you've got a good profit, right? Dollar value profit. But when you start looking at these reports that, what I'm talking about right now, and doing an income statement only by a particular practice group or by a particular location, et cetera, when you start doing that, you might notice that, oh, our highest volume, and this sample income statement will reflect this actually, but our highest volume is coming from our X practice group, but it's running in the red or it's a very low profit margin, versus this other section is actually working far more effectively and maybe bringing in less total dollar value, has a larger profit margin, and is actually resulting in a higher dollar profit. And so this sort of reflects it, because you'll see like your total income, from 2019 was 434,000, 2021 was 406,000, but then your profit, which is that net income, was 145,000 compared to the 128,000, right? I'm just looking at the numbers without going into the details, but I've seen that happen so often where it's like, well, I'm just looking at the bottom line, and Well, it's true, but you really want to understand, you know, where is this money coming from? And where is more importantly, where is the profit being generated? And it's okay to have areas that are less profitable, but you have to call that, right? Do I focus more on, what is that client type? What is that case type? And where did these clients come from? And then focus your marketing or your efforts in that direction.
So let's look at the ratios before we keep moving. And I'm also, as you tee up for that, we've done that in the past. We've done conversion rates on our associates and attorneys to see how they do and who has the better conversion rate. Like you said, like, is it better for them to do consults or is it better for them to do the casework, and which ones? And, if you really get into that nitty gritty, you can take advantage of that information. Like we found that I have a really high conversion rate. So the best ways use of my time is to probably be doing as many consults as I possibly can. And instead, another to do the legal work as much as possible. So anyway, so what are some of the key ratios that we should be looking at?
Well, and this one's really, you can do it as a firm, the realization rate, or you can do it by attorney, right? Your timekeepers. Your timekeepers are anybody that can actually help you generate revenue, be productive in your offering, right? In your legal services. That's your attorney, paralegal, legal assistants, law clerks, whatever, but you can do it by this. And that's basically I talked earlier about those data points in our accounting system. If I know that this attorney was assigned this dollar value of cases, but we've only collected X amount, what that's your realization rate. And you really want to be up there, like, I wouldn't want to go anything lower than 85% should be your realization rate and above. I know it's high for a lot of people, but if you go for that goal, you're going to be able to collect and bring that influx of money faster. So that's what your realization rate is about. And that also helps, measures, as Ruby mentioned earlier, your HR when it's time for reviews, where you have more objective data to show. And now each attorney or each person can still bring other value, but at least you've got that bottom line objective information. Profit margin, this is really critical. That's a little bit about what I was talking about earlier, where, you may, and I've seen this, so if you've got a $1 million law firm that's brought in $1 million in revenue, but their profit margin is 5%, you're going to have whatever that value is. I don't know. I don't have a calculator here. But is that five? That's a 500,000. Is that right? Yeah. Versus a law firm that brings in maybe 500,000, but brings in has a 50%, let's do the math, that's easy, has a 50% profit margin. Their net, the income they've brought in net, their net profit is going to be 250,000. So, and I've seen firms of different sizes, and it shows that somebody may only have a 5% profit margin. And so it also
reminds me of the marketplace report that Reed you did with Ayla, and I'm sure others over the course of the last decade or so. Like sometimes that sweet spot was like 3 or 5 attorneys and 3 or 5 legal assistants or something. I'm paraphrasing, but like they were able to do some reports to figure out which ones were the most profitable. And that goes back to what we said, like the more people you have doesn't mean you're more profitable. And busy doesn't mean profitable either. And so, maybe some of these small solos have it all figured out and they're making more percentage.
Well, and I'll tell you, I mean, it's doable. I think realigning, especially after the pandemic, right, kind of forced a lot of people to take a look at efficiencies, driving efficiencies through remote work. How large a carbon footprint do you want as far as a law firm office location? Technology today, systems today are so much better where you really can compete with the large firms or larger firms. I think that that's really important. If you know how to use efficiently, effectively your systems, you keep your finger on the pulse with some of your financials, because that really pinpoints, it just tells a story of your firm. How am I performing? It really helps pinpoint issues where you need to take corrective action, and are you keeping to your budget? But I think, yeah, I mean, it doesn't really, of course it matters, right? If you're working effectively and efficiently, of course it matters. But I've also seen firms be in the red. So is this okay? Probably not. You see the money coming in and you keep working harder because you need that money coming in. But sometimes what happens, it's sort of this black hole, right? You keep working harder because you need that money coming in. And so you're taking more cases and you may discount. You work and you work and you work, but it's like, it's costing you more to take that case than it would if you maybe save up and think about, how do I correct this? I mean, this was one of the issues long ago, was that we were very busy, but probably not the ideal client base. I remember one client, one of my all-time favorite clients, who couldn't pay his bill. So he brought in this old TV with an old VCR that's connected, a little TV. And he wanted to pay us with something, right? But, which is great, you value that. And he's been one of my all-time favorite clients, a very old man who really studied for his citizenship case. And I never forget this man, but it also highlighted, what is that client base that you want? And that's what your financials will tell you. You'll look at it and say, who's generating the most revenue for us, and who's the most what client base is the most profitable?
So we'll go ahead and move to the next slide, but this is, we'll share this. But basically, this reminds me of like the sales funnel, what's your conversion rate from a contact to a consult, from a consult to being hired, it turns into a case, that type of thing. And, when you look at those numbers, you question, well, where's the leaky bucket? Where do we lose people? And so when you have that data, you can pinpoint, maybe it's a receptionist who's not friendly. Maybe it's bad technology. Maybe it's an associate that's doing a bad job in a consult. And all that data is really important, and increasing your numbers. So what would you, there was a question about, and because a lot of people want to hear about the employee tax retention credit, but we have towards the end. But someone asked, what's a good profit margin for a firm to have?
Well, I mean, I think I always,
that's the slide we're on. So
I think like an okay profit margin is probably 20%. Okay. 30%, of course, is a good balance. If you can get, because it's a service industry, so it's not like you have inventory or any of that. So having said that, I think because it is a service industry and technology is really strong, especially in the legal field right now, and I keep seeing improvements and access to great systems at a low cost. I really do believe that it's possible to get up to that 50% margin, but I think you're doing okay if you're at a 20%. I think that's fine. 30% is really good. 50% is wow. Wouldn't that be great?
Yeah, that's amazing. So, I mean, I think that goes back to like, can you cut your, like you said, carbon footprint, your office space? Can you leverage technology the fullest? That's, people are streamlining those things to increase your profit margin. And so I think we can run these numbers as you made it really clear here. For you were pulling those numbers that you had shown from 2019, 2020, 21. So anything else to say before we move over?
I think this is really important to your payroll margin, because as a law firm, you're making your money from people working for you, right? This is where it really counts. And this will give you a good idea. So whatever you spend in payroll and benefits, divided by your gross income, your income before your expenses, will give you that margin. A goal is really that 30%, 33%. If you can make it higher, which usually I really think it's possible, and I've seen this in certain practice areas, right? So if you're doing removal defense or litigation where it requires physically going into and driving, and it's going to be, the profit margin on that is going to be lower because you can't leverage your other resources. But that payroll margin, I look at that all the time because this is really important. It tells you how effective is your staff being at generating this revenue. And of course, you can't do it without attorneys or legal assistants, but it's across the board.
So let's move. What would be your key takeaway on making your financial vision?
I think one of the things is budgeting, right? Now, where do you want to be a year from now? Where do you want to be 3 years from now, 5 years from now? And then working backwards toward that when you're budgeting. If you budget it and you review these financials daily, you're going to get a lot closer to hitting your mark. If you don't, because you want to know, what are my fees? Are my fees too low? Am I discounting every time a client asks, right? Because that also changes your business strategy. The minute you start discounting and not sticking to your fee schedule, like we'll review our fee schedule every year. We'll stick to it through the whole year unless a new program comes up. And then every year we review it again and then change it, or it can go up. It can maybe go down a little bit. It just depends. Mostly they go up, but I have seen it go down on occasion. So I think like setting those fees is really important. Doing this we do this every January. We set it for the whole year. And then running those reports, if you have more than one attorney doing consulting, or if it's you, it'll also give you a sense of how many discounts were given and the value of that. The minute you start discounting, you've changed your business strategy, right? To a discounted service business strategy. And you're going to get more of those referrals. Our base is really referral driven. We do very little advertising, if any, but it's really referral. To me, that's the most valuable. You can't scale as well, but this industry, the industry that maybe you and I are in immigration, it's hard to scale that unless you start doing like corporate accounts, right? Which really, really helps you scale that. But the referral source, you're going to get more of the same referrals as you start signing up. So I think, value your service. You bring a lot to the table, and expertise and knowledge and know-how process. Don't discount unless, there's some real reason for it, but try not to discount. And then setting that budget out. What does that budget look like? One of the things that when I talk to individuals about doing this is, what is a reasonable going rate for you as the attorney, not you as the owner or you as a partner? What is a reasonable going rate? And then set that as your pay, put that in the budget. If you're not getting paid at that level, you need to stick it in the budget and figure out how you're going to get paid. But to me, it's always get paid first. Pay yourself first, because all that's going to happen if you don't, you pay everybody else first. Ultimately, the firm, you can't deliver legal services without the attorney. That's you.
So
and if you
that question was brought up by Joseph, like, do these percentages on the prior slides take into account salary for owners? And I mean, I've seen people do W-2s or I've seen them do draws, but I think he was referring to the payroll margin. Maybe
it just depends. This is just a very generic example. I recommend you pay yourself through payroll up to what's covered through, and this is me. I'm enjoying my gradual retirement. I've worked hard for it, and I'm really loving this, right? But I still enjoy doing a lot of this stuff. But I think that part of it is pay yourself up to what that Social Security Administration top level is. I don't know what it is this year, but whatever it is. So your Medicare and Social Security taxes are covered to the max. And then the rest of it, take it in distributions and profit distributions. But I would definitely, that's my own recommendation. I would also recommend you definitely talk to a CPA. It's money well spent that can plan all this out for you.
So I think that we will share these slides, and we can go through these. It's important to make monthly goals, regular goals, and have these ratios. But we've got about 15 minutes, and I think maybe we should go to maybe some of the end of year review or any other really big point you want to make in these slides before we go to the end of year review.
I think honestly, there's just so much, and I can keep it is so much to cover in 1 hour because it's all in the details. I think the data points, make them as detailed as possible. The more detailed it is, the more information you're going to be able to pull in different ways, right? In different things.
But I've heard that, and I wrote about that too, about the 33, the thirds, and also to be able, what a person should be able to produce. And I mean, I think also what happens when you're getting a early associate, they generally cannot generate a lot because depending on if it's a lateral move or maybe they have a book of business or have known to have a high conversion rate, but so these are some of the considerations. Because I'm just going to tell you, like, I think what brand new attorneys are expecting is like completely, I don't know if it's just my experience, like completely disconnected with reality, with what the world works in terms of like how immigration works. I mean, some of the people that I've been applying, I'm sort of shocked at what they're asking for with like zero experience. But I mean, this is something that you have to calculate. And maybe, I mean, that's just known that people don't really generate a lot in the first couple of years of being a first time associate. But these are considerations when you're doing your math.
Yeah, and when you're doing this also, I think if you're doing, maybe an entry level, if the going rate is 60,000, maybe, times 3, that would be, I don't know, 380,000. Or what does that look like? If the going rate, if your multiplier is 5, I try not to go below a multiplier 5, because that will, I mean, these are just examples. They don't really belong to anything, right? They're just different examples of what's possible, what they should generate. And it depends on your field. If you're in immigration, you're doing a lot of family-based, which is all very transactional other than the interview. Or if you're doing a business immigration practice group, I mean, we've worked remotely forever because I don't even see, 90% of my clients face-to-face. So it's a great area to really scale, to leverage, and to produce, right? And productivity, I think, this is really important. What does productivity really mean? I've heard people, well, I'm very productive. I've, got all these cases out, et cetera, et cetera. But, productivity really is work plus compensation. If you're not getting paid, you shouldn't be doing it. And that doesn't count as productive, right? So every time you touch a case, I recommend you review that balance statement. What has been charged? Have I charged for all the work? Has the client been paying? Can I continue? If not, it goes to a call to that client. You're behind. I really want to get this through. Or if you've got a system, somebody else that does that. I think there's nothing like an attorney who's working on the case to just give that client a friendly call, like a touch base spot. I know you're behind, or I think that's really important.
Yeah, I mean, that's really important. And making sure you don't work at all without having been paid for it, and if we do retainers for our court cases, and if we have an evergreen clause, and if it's going low, I mean, our team is communicating with them right away, because it never ends well if they owe a lot, even if they've been good on payments and you like them and whatever.
Yeah, I mean, and that goes to also like that payment plan, right? Are you going to extend payment plans, and how long is that? I think one thing that's really critical is if you do the timeline for every case you sign up, and you give that to that client with deadlines. This is by this date, we need all your documents. By this date, you're going to come in, or you're going to review, or we're going to have the forms to you. By this date, it's going to go out. And then this is your payment plan that goes with it. It needs to be paid in full before it goes out, and you need to be making these payments, so you're compensated. I think also something about that's worth mentioning is when you've got those clients that require far more work than has been factored into your fees. You need to consider that. Or is that a red flag? Or, what is that? It's that same Pareto principle. If you've heard of that, it's, 80% of your consequences result from 20% of causes, right? Or 80% of your headache is from 20% of those clients. Or there are so many different ways to look at it, but being able to identify that, right? How much time do you want to be wasting with these people that you're not, it's a mismatch, right? It's not within your budget or within your vision or your plan for the next few years. And that's how you get to it. I mean, this is how you get to, you have to plan, you have to budget and keep doing it daily, weekly, quarterly, monthly, annually. Look at it.
So we'll send out the PowerPoint. We'll have the financial reports, and you can go back and talk with your team. But I think in summary, with the wrapping up the year, and what we have a slide about employee tax retention credit. So is, if you could have maxed out your retirement IRA, whatever you've got, double check what you can do, make sure they're taking advantage of your tax opportunities, review loans, get your PPP forgiveness if you applied for 1, 2, there's a deadline to apply for those. Plus it makes it easier if you get it done within a tax year, it makes it simpler on some of those things. And do an assessment. And I believe I have this. Okay. So basically one thing that the employee tax retention credit is something that that came up to me. This is why a lot of people are interested in this topic. I learned about it maybe 2-ish months ago, and it's been out for a while, but it basically was for certain percentages that you've been retaining employees, that you could go back and amend your 941s and get, there's a lot of calculus into the math. And I don't know, Helen, if you want to give us a little update on what you've seen, or Fiona, if anybody who's been wanting to talk about that. Basically, the opportunity, you have to amend your 941s before the end of this year. So this is what I talked to my CPA, they said they were busy with their taxes in mid-October. Then I asked somebody else, and I basically, I have an Excel sheet. I gave it out to some people. That's what I used to fill out with my information. And then I did find a friend of a friend told me of a CPA that does do this. And my friend's already gotten $50,000 in a credit given to her. I don't know what the processing times are, but I've been told I should be getting about 80,000. I'm still waiting to find out an update of what's going on with that. But so this is something that you look at how much you've paid your employees in the last 2 years. You look at your quarterly revenue as well. And so you need a lot of that information that that Ruth looks at every day. You're going to need to plug that in, and then you can if you find somebody, I'll go ahead and send it to everybody's registered. I'll just make that simple. We get that out with the recording. So who wants to talk about what they've been experiencing with the employee tax retention credit? Because I believe the infrastructure bill that was passed recently, I think I believe I heard that you can't take advantage of the fourth quarter of this year with the infrastructure bill. I see you're nodding your head, Ruth, but and I think certain CPAs didn't do this. It's sort of like immigration attorneys who don't do a certain area of law or weren't paying attention to certain areas. I think that's the reason why we've been having issues. Is some CPAs are so many changes, so much going on, I'm just going to deal with this. But then there's some that actually figured it out and did one, and they're okay, I'm going to do others. And then the friend who told me about it has ADP. So once the CPA told her that she was eligible, she went to ADP, and then they helped her do the change for the edits and things like that. But I use QuickBooks Online for my payroll. So I was getting the CPA to amend them for me directly. So has anybody had success? They have questions about this. It's really, I think I'm not an expert on it, but my biggest thing was wanting to let people know that it exists. And okay, Helen, did you say you wanted to
Ruby,
okay.
can I ask a question?
Right.
So I think, and thank you both and Ruth for this, was so helpful. I in relation to the retention credit, so basically you could qualify if you had a decline in revenue, but I'm sure some of us were already on an upward trajectory as far as our firm goes. So comparing revenue to 2019 is like not really indicative of the decrease in business, because we were already on an upward trajectory in, like, you know, before the pandemic. So my accountant initially was like, you don't qualify based on the, you know, the decline in revenue. And the other way to qualify, as we were discussing, was if you experienced a more than nominal portion of your business were suspended due to a government order. And I know Helen had shared some really helpful information in the Facebook group, and Ruby as well, kind of comparing a hospital's services where a portion of their revenue was disrupted, or their businesses were shut down, like the elective surgeries, for instance, couldn't go ahead. But yes, of course, they were still open for the essential, emergency, and so on and so forth. So kind of using that analogy to us. And one thing I was wondering is, I mean, we do a lot of visa processing, a lot of like European cases, and we obviously had the travel bans that were in place from, you know, they just ended, right, with Europe. And so a lot of our clients were obviously, you know, not able to go in for visa appointments or eligible for that. So I'm wondering if anybody has used the argument about travel bans in addition to court closures and stuff like that to say that they qualify for this, you know, shutdown piece.
Let's see. And Helen, did you hop off already? I know you said that you wanted to do a session just on this. I mean, honestly, my CPA didn't talk to me about the shutdowns and things like that. I was just running the numbers, and she said I was eligible. I think that we all were affected by closing down immigration and our mobility. So. But
I think that that's a reasonable argument, though, Fiona. And to me, it's a clear connection between travel bans and business, because it's you have an international client base.
Yeah.
And it requires a lot of movement, right? So if you're moving employees in and out, whether they're investors, they're stuck outside the country, that will, I think that it's a very reasonable argument, and I see the clear connection.
Yeah, there was one of the FAQs though mentioned if the you know, it was not related to law firms, but it basically said that if your business was open because it was deemed essential, but the customers were prevented from patronizing it, well, then that wouldn't qualify. And I don't know that that isn't necessarily a direct analogy with ours, but I mean, I just feel like I don't think there was, you know, an industry as impacted as ours with global mobility. And so it would be great for us to be able to leverage this credit. And a lot of us retain staff, you know, despite all the tremendous challenges. And so I think knowing that we only have a few weeks to try and figure this out, and just even hearing that it was a possibility was amazing, because my accountant had originally said, no, kind of what Ruby was saying, you know, they didn't know enough about it, but like, and as we say, there's gray areas, you know, could you make an argument? But I do think it's critical, and I think it could really benefit so many of us if we could figure out some of these nuances. But I just don't know what's the documentation required, and, you know, the processing times, and what you would need to do. So I don't know, I was just grateful to have this forum to be able to even bring this up.
Yeah. Well, unless anybody else wants to mention, I mean, I think it's pretty much find out if you're eligible, find out somebody who can help you amend your taxes, your 94.1, whatever taxes you have to. It looks like somebody's mentioning that they're telling them they have to amend their corporate taxes and their personal taxes for 2020. And then, or if it's maybe use ADP or something else, like probably what we should do is just get like somebody who actually knows this and is doing it for us, like on a call, and just be like, teach us what we need to know. But we're running out of time, and like even collecting some of that data just to plugging it in the Excel took us like a day or two, because we were just sort of like scrambling. I mean, it's you know, if you have it organized, it's probably fast. But I mean, the bottom line, I just want people to know at least it exists. Ask around to your normal people, like see a CPA, bookkeeper, what have you. Do you know, have you done them before? Are you can you help me with this? Do you know someone? I'll also tell you that like the CPA I found was said that you would charge me, I don't know what she said, maybe 507 something to amend each quarterly tax return. I also heard somebody was charging like 33% of what the people were going to get back as a credit. So I don't know if anybody else has heard that too, but
and it is taxable, right? So that seems like a high percentage, especially for some credit that's going to be taxable to you versus like the PPP loans, which is forgiven and not taxable.
well, it seems like a big cut because some people might be getting
Huge.
like 50, 80, 100 to $200,000 or something like that. But
It's huge.
And Ruby, did you determine eligibility through this calendar year as well? Because my accountant was saying that the retention credit was much more if you were eligible in the 2021 year as opposed to last year where it was a much lower credit per employee.
yeah, the Excel sheet has for both years. And so I plugged in everything I had.
Okay.
And from that's where she made the calculation from it.
Okay. Thank you.
So anyway, we're at the top of the hour, and I know Ruth, it was amazing. Thank you for all that. And I know, like we said, we probably were building ourselves up to having to do a part 2 or part 3 on that alone. There's some other questions or comments being made. Do you all want us to would you want one on just the employee tax retention credit if we can find like a reputable or knowledgeable speaker on it, like next week? Would anybody be interested in that? I think we're running out of time. It's holidays. We got to get through to this, find these people to help us file these things before they disappear. So, I really just wanted to make sure. I think once I found out this existed and my friend kept saying, Ruby, go do it, then I went off on my scavenger hunt. It took me like about a month to figure it out. And it looks like Helen says that she's heard of 6 to 8 week processing times. That sounds about right from what I'm hearing from some other business owners. Okay. So let me reach out to that CPA or see who I could get to speak, because I really would want somebody who can speak knowledgeably on this. If anybody else has used somebody that they trust, we could just record it, even if it's not a good time for everybody, and then you can watch it later. But I think this is a really good venue. So, okay, let me pull that off in the next week. But your homework is to go look into it on your own. So don't wait on me to do the session. And I will send the Excel sheet that I used to everybody who registered, including the recording as well. So Ruth, thank you so much. You have a wealth of information. You're a great mentor to have to share with all of this, and I wish we could soak you up a little bit more before we all have to go about our regular day. But I think you have a lot of great points in here, and we didn't get to go through all of them. I think our next webinar that we have, besides whatever we might pull off next week, is January 12th with Chuck Cook. We're going to do one about how building relationships with reporters and media. Fiona, I should have you hop on too as the chair of the ALA Media Advocacy, but he and I did a talk on this, and it was really fun. And so I just wanted to share some best practices. And then we do have lots of different ways to stay connected. We have these monthly webinars, sometimes twice a month when we get so inspired and excited. And we have the Facebook group, the Power Up Your Practice. You have all of this goes on our YouTube page, so you can become a member, subscribe and watch it there. And all of our stuff that we've been doing since May is there. We usually have about 2 a month. And so Facebook group. And then we have the last retreat of the year. It's over Zoom. We have about 5 or 6 people, business owners, and we're going to go over all of these topics that are in my book. And if you're one of the first few people to register, you can also send my book for free. We might have an opening still for that, but let's just stay in touch with us if you're not already on the Facebook group, and join our newsletter and find out what we're doing. If you want to make sure, if you want to talk about something, there's a topic you want to hear more about, then just let me know, and we can make it happen. We're trying to book out ideas and speakers for February and beyond. So I really appreciate your time, Ruth, and your PowerPoint and your wealth of information, and everybody else who was chiming in and asking questions. And I mean, honestly, I'll just say, from the consulting I've done, from running my law firm as long as I have, and talking to others who open up about it, I mean, I think this is one of our biggest weaknesses, honestly, as lawyers slash business owners. And because this isn't an area that we had to learn, this wasn't something that was maybe our favorite area, you know, that whole joke about I became a lawyer because I don't like math or whatever. But anyway, we need to know who's paying us, and we're getting paid, and we can pay the bills and be profitable. So any closing thoughts, Ruth? I'll give you a chance.
Yeah, thank you. Thank you for the opportunity to share. Thank you for all you're doing, Ruby. It's amazing to have a group like you're forming, because sometimes it's about just talking these things out and having a source to go to and learning from each other and experience. To me, there's nothing like the experience to learn from. As far as the financial part, really pay attention to it. If you don't, you do need to know your business. And this is a great way to really understand the dollar value behind what you're doing.
Well,
best of luck.
Thank you so much. And I'll probably get you to come back if you're willing, if I can get you out of retirement to come talk to us. But anyway, I will, if you have a suggested speaker for next week for employee tax retention credit chat, and Ellis, you're mentioning that you are become an expert, then, or not an expert, but you've watched enough YouTube videos. So that's what we need. We need guidance. So thank you all who watched. If anybody wants to stay on just a little bit, but we're going to be closing up the formal portion of this and working on putting together a presentation for next week. Again, stay connected with us. And thanks again, Ruth. Really appreciate it. Have a great day.
Goodbye. Thank you.